Silver linings are very close to my heart, so this is an especially important panel for me, and I'm happy to see so many people on the stage here. Why don't we start by just kind of going down the panel and having you guys just name and the company you work for.
Lon Shaver with Silvercorp Metals Inc.
So, Lana, just any thoughts on either one of those aspects, and then we'll go to Tony next.
Well, I mean, I think it's a positive that silver has this dual nature to it, and you made the comment in terms of industrial use. Many years ago, we're all used to silver going into the photography sector. That vaporized is gone. Now, with electrification, electric cars, and then also obviously the solar side, you've seen a new off-taker for silver. And I think the real positive thing is the silver that goes into those applications, they're going into very long life items that are being set up to deliver power. In the case of panels for 30 years, it's sort of a set it and forget it kind of thing.
Yeah.
And so when you see that silver going into those applications, it's not coming back based on where it's going. Compare that to other metals. There's price elasticity, and prices go up, and prices go up in your own currency. That might make you a seller of the metal, but that silver that's gone into those applications is not coming back.
Yeah. Lon, over to you and what you're doing at the Ying district.
Well, yeah, I mean, Ying is roughly the six of the 6.5 million ounces of silver. It was 6.6 for the year ended March. So Ying is the biggest producer, obviously, in terms of our two producing assets. It's been it and GC have been a steady producers for the last 7 years, between 6 and 6.5 million ounces. We drilled 1 million meters of core in 3 calendar years, starting in 2020. Some of that was looking at some new discoveries, but that also found a lot of the traditional mineralization. Filled our reserve resource base back up, and we're seeing the opportunity from an incremental standpoint to grow from that 6.6 to 7 million in this current fiscal year, and we're targeting 8 million by fiscal 2026. And with that, we're embarking on a growth strategy here to not too exciting on this point, to build a third tailing storage facility, and that's really what's going to be needed to put those tons that we've identified, through, but also a mill expansion. We have 2 mills right now, and what we're going to do is we're going to build a third mill, roughly 3,000 tons per day, at a cost that you couldn't in the Western world, come anywhere close to this, that what we can do in China. And then when we've got that, we will decommission our oldest mill, mill number 1, and we'll be left with 5,000 tons per day. And I sort of look at that, if you look at the evolution of the mine, I sort of think of it as Ying 1.0, 2.0, and 3.0. We're in 2.0 right now, and it's been a healthy status with that production profile and low cost. But 3.0 is going to take us to a new level in terms of overall throughput capacity and also diversification, potentially to produce some copper as well, because we've been seeing that in the ore bodies.
Yeah, I had a hard time believing that CapEx number too. Lon, you guys are a bit of a unique animal in that you're the only Western company I'm aware of that mines in China. So do you want to talk a little bit about operating in China? But also, I mean, I want you to frame the context in terms of what the investor feedback is, if you will.
Yeah, I think
the impact on your share price.
there's a bit of nervousness in the market, and I think, not to be flippant, but from an investment standpoint, we're all happy with exposure to Western companies that have the either the dominance of their revenues or their manufacturing bases in China. So we actually kind of think we're not really that different.
Yeah.
We just happen to be manufacturing silver, lead, and zinc that go into the export economy in China. I think the misconception about operating there is, there's a dual nature to it. And on the one hand, there is actually quite a fair bit of stringent regulation as it relates to environment and safety. That enforcement, hasn't always been the case, but that's been ramping up under this administration, and we're fine with that. We like that. As a Western company, we're operating to Western standards. So, as the standards and the enforcement have come up, we're sort of in a good spot because we've already been compliant with that. I think the main difference is there's an understanding in the country, which is sort of lacking in some other countries, which is the fact that, okay, well, we need to make sure it's done safely, but you're actually providing a good. service to the economy, and we want to support that. And you're creating jobs, you're creating tax income, you're helping, again, supply materials that other industries in China need. So there's a bit of a dual nature that, well, follow the rules, and there's a lot of them, and there's a lot of compliance, but we have a team to deal with that. But on the other hand, there's a commercial view of the fact that, we as, well, China as a country in the industries, but, overall as, world society, we need these commodities, and let's get them, let's make them, let's produce them.
We've got a couple of minutes left. I want to switch the topic to M&A. We've seen a lot of M&A in copper. We've seen a lot of M&A in gold. Not so much in silver. And I'm just, given everything you guys have said, I'm wondering if I can get your thoughts on what it's going to take to see some M&A activity in the silver space. I'll start with you, Tony. Lon, you guys have been looking pretty actively.
Yeah, I think I would agree with Tony. I think the pace that we've been seeing in the other commodities should pick up. I think the one challenge that silver has in that regard is there's fewer companies, fewer projects. And so just by the nature of lower numbers, there's less in the way of activity in that area. We're certainly looking for silver projects, but we have to broaden our horizons and look at other commodities as well, just like many of the other companies on this stage. But I do think the pace and the tone of the market has changed.
And I think we'll wrap it up on that note. Guys, thank you very much for participating on this panel, and all the best to all of you.